Daniel Reid here. Today I'm going to focus on interest-only lending, or more to the point, should you do it? It's something I've come to change my opinion on, or I guess my stance on over time, just due to mostly what I've seen from people that have had interest-only lending and where it may have gone, not to plan. Maybe it's gone wrong for some people. There certainly are some benefits to interest-only lending, and they can range from obviously having a lower repayment and so on, but the long-term benefits are probably more present for a situation where you're paying a loan off. So to give you a great example, many investors use interest-only lending, and they'll do it in such a way where they might buy a property, have it interest only, and the rent will hopefully cover most of their expenses. There might be a small shortfall depending on how it's structured, but if they're lucky, it's covering most of the expenses. So by going principal and interest, they've got to put more of their own funds in each month to cover that difference, whereas interest only, they don't. So that tends to be a very appealing sort of option for an investor. It also means that you can use that extra cash to go and get another property, and that's quite often the strategy. And then obviously you're relying on future capital gains in the property, not necessarily relying on building up equity from the start and paying down a loan and having the rental income. You're more relying on future potential equity gains. Now there's a few dangers in that. I guess the most common one is what happens if the property goes backwards? What happens if your rent goes backwards? Then you're stuck in a situation where you don't have as much rent coming in anymore to cover your expenses, and so suddenly your situation is going backwards. You're not paying off a property, you're just getting a bigger debt, and your plan isn't working out because you're not getting any extra investment properties, and so on. So you're going backwards. So it's a good question to ask. Is investment lending the right thing for you? It's certainly great in a situation where the property market's booming and prices are always going up, and rents are going up, because you can use it in that sort of situation. But what happens in 5 or 10 years time when the market changes and it's not doing that anymore, and suddenly you've got 5 investment properties that have all done really well the last 5 or 10 years, and suddenly they've all gone backwards? What situation is that going to put you in? So I guess where I've changed my stance and where I've seen it happen quite a lot, it's even happened to me. I'm in finance, I'm not immune to it. I'm only human. But what I've seen happen is that exact scenario where the property market has come back in an area, the rents has come back, and suddenly instead of having $50 a week as your maybe out-of-pocket expense, suddenly it's $1,000 a month. Now, could you imagine being in that situation where suddenly the rents have dropped? When it happened to me, it happened overnight, because I had a property where I had a good long-term tenant. They were in there for 5 years on a lease, and they were paying a higher rent. Now, over the space of about a year, that area went backwards, but I still have a tenant, so I was good, I was fine. But what happened was, when their lease expired, they obviously moved out. And suddenly I went from a really high rent to a really low rent, and I've seen that happen to a lot of people. So if you're paying a loan off, your strategy is to buy an investment property, have it P&I, and actually make extra repayments on top of that. So you might try and pay it off in 5 or 10 years, maybe 15, whatever it might be, whatever you can afford. But if you're paying it off over time, you're actually going forward, you're building up equity. And if things ever go bad and the property goes backwards and rent goes backwards, well, suddenly your loan balance is a lot lower. You could always use some of that redraw if you needed to cover any shortfall. But if you own the property, it doesn't really matter what the property market does. Certainly it's not going to be the best thing to lose money, but you're not in a situation where you can't afford to live anymore, because you own the property, the rent's coming in, and that's this extra income that you've got. Sure, it's not as much as you had 6 months ago, it might have even halved, who knows, but it's rent that you've now got forever. You can keep that money for whatever you want, and you can use that to buy the next property. So rather than having multiple interest-only properties that are all highly geared, where I think the future of investing may go is people will start realising that they've got to start paying off these investment properties before buying the next, or at least making a substantial dent. You might get down to, you might pay off half a loan balance before you buy the next one. That way you've got a big buffer there. And once you've done that, you can always refinance it or restructure it so that then your repayments become a lot lower. But the idea is you want to make sure that really you want to be building up equity from the start, and not relying on those future capital gains that may or may not come, or may come and then may disappear. Because I have seen that. I mean, you look at places like Port Hedland, they were booming for years and then they came back quite heavily, and there's a lot of investors out there that are stuck in a situation they can't get out of. They can't even sell the property because they haven't got enough money to cover the loan. So they just have to hold on to it. Hold on for dear life, I guess, is the phrase you often hear. So do I recommend it? Well, I wouldn't say I recommend for or against it. I guess it's up to you to make the decision on what's right for your circumstances, but it's a choice you have to consider, certainly. At the end of the day, you've got to make sure that, you know, what happens if something goes wrong. So don't think about what can go right, how much money can I make from this. Think about what can go wrong. If you're thinking about what can go wrong and you're structuring your finances and your strategy to cater for that, then, you know, at least when things go wrong, you've got a plan, you've got a way out of it. You're not stuck paying a high mortgage that you can't afford anymore because there's no rent coming in, or there's very minimal rent coming in. So, you know, that would be what I'd suggest, is make sure you know what you're getting into if you're doing interest-only lending. Yes, there certainly are some benefits, but there's a lot of negatives that can come with it. So really think hard before you make that decision, and make sure you set yourself up for success and not for failure. Because the last thing we want to see is people failing. That's it from me today. So any questions, hit us up. Thank you. Bye.